Okay, folks. So yesterday, the government announced that insured mortgages can now go up to $1.5 million for the value of a home. Based on the discourse I'm seeing on social media, even on my own post from yesterday, clearly Canadians, the majority of Canadians, don't care for this or did not want this change. What Canadians want, and I'm basing this off of everyone's comments, is they want lower house prices. They want less debt. They do not want the ability to strap on more debt by having to pay for a higher price for a house. So then the question becomes, what is the government's motive? Why did they do this if the majority of Canadians did not want this? And just so you know, the associations within the banking industry, specifically in mortgage brokering, real estate, they were not asking for this. The mortgage brokering industry, specifically our association, had been asking to increase the cap from $1 million up to 1.25 for a couple of years, just because house prices had gone up so much. Even at that, we thought that was a big ask. Not sure we were ever going to see it in the near future. So this $1.5 million cap is out of the blue. It came out of nowhere. It's way higher than we expected. So again, back to what is the motive? If the majority of Canadians don't want it, the associations that work in the industry weren't asking for it, what is the government's motive? I believe the government's motive is to keep the banking sector, which is what it regulates and monitors, sound. The banks have a large proportion of uninsured mortgages on their balance sheets, just because the number of uninsured mortgages has increased over the years just because house prices have gone up so much. And you can tell this by the interest rates. Insured mortgage interest rates have come down very aggressively recently, where uninsured mortgages have not come down as much. And I think this kind of illustrates the fact that this sector of the mortgage market is kind of locked up in terms of the banks aren't willing to lend as much. And if they don't have capital to lend, then it kind of restricts the economy from growing. And so therefore, I think the government's motive here is to keep the, for lack of a better word, the gears of the economy moving as best of their ability. And so they want to keep the banks lending, and they want the banks to be able to hedge or insure more of their mortgage book. So the motive is the financial sector. Make sure that it is sound, make sure it is healthy. This was not geared at helping those 1 or 2% of the population that actually would qualify for a $1.3 million mortgage. I mean, you need a household income of about $300,000 to qualify for a mortgage, given where today's rates are. So, if you think about that, what percentage of the population has a household income of around $300,000? Not a lot. It's probably around 1 or 2%. So this was not geared towards the majority of the Canadian population. This is geared towards keeping the financial sector sound and in good health, and keeping the economy moving, or trying to help the economy moving. That is my belief, and I'm sure there'll be more evidence or discussion on this point going forward from people that are more informed or more in the know than me. But these are my latest thoughts, and I can understand where everyone's coming from in the comments on how they believe that the Liberal government, the Trudeau government, was very misplaced in making this change. This is not what the majority of the Canadians want. We want lower house prices and less debt. And I think even give us stable house prices and increasing wage growth over time. That would solve the issue too. And I think that's probably the best solution, is stable house prices and higher wages. How do you get that? You need increased productivity. And that's the biggest problem with the Canadian economy right now, is our productivity is really hurting, which is pressing down on our wage growth, which is making us feel poorer and poorer. All right, everyone, take care.